Hey everybody, Chuck Barone. It is Friday, January the 26th, 2024. Time to wrap up this crazy week. Lots of little stuff to talk about today. Of course, we got some big news on inflation. Kind of a mixed day in the markets today. Kind of a weird week, a weird wrap to a weird week. And we'll go into some detail. Before I get rolling, of course, let me take a second. Welcome everybody to the show. And as always, thank you guys for your support. You guys showing up, watching the videos, engaging with us in the comments. Means the world to us, guys. We appreciate you. All right, so let's talk about markets today. Well, we were expecting this PCE number. We got it, and it came in pretty good, pretty decent, what they're reporting. The number coming in showing inflation for the year at a reasonable number, down significantly from 2022's. Markets reacting in kind of a weird way today, right? So look at these markets. Now today, all of a sudden, the market, which has been getting really good earnings for the most part, Tesla, sorry, today not so good. Intel came out with some negative stuff, and a couple others, health insurance companies getting beat up, Humana taking some big poundings. But anyway, so these markets ended up kind of mixed today. The Dow, the narrower market, actually gained 60 points, closing at 38,109. The NASDAQ, mostly Intel driven, down 55 today, 15,455 on the NASDAQ. And the S&P, which had been setting records for 5 days in a row, finally breaks the winning streak, down today just 3 points, 4,890 on the S&P. I'm guessing there'll be new records broken next week. So the markets, the very narrow market, the Dow 30, well, that was up. The rest of the market, not so good, although even though it was down so small, it's barely a blip on this chart, right? So stock market, not much really news today. Bond market giving back the gains from yesterday. Bond prices falling, yields rising. The 2-year up 2 basis points today, 4.16% for the 10-year. 2 basis points, not a big move. I thought the longer term would be going up faster than the short term, but not today. The 2-year up 4 basis points, 4.35%. So the inversion a little bit wider, 19 points. It's almost over, guys. It's going to get normal again soon. And I saw a thing today. Where's this note? Oh, yeah, the yield curve has now been inverted for 80-plus weeks. No recession. So that indicator, not so accurate this time around, although I guess it doesn't mean that the recession is still not to come. In fact, the article I was reading that made note of this said that the last time the yield curve was inverted this long was the big recession in 79-80. He said also, interestingly, the last time we were in a real inflation fight. So there you have it. The dollar today, not much happening. Dollar down small, fractionally, 103.46 on the index, so still a decent, strong number for the dollar. It seems to be moving fractionally up and down, but really, and basically on a treadmill running, but going nowhere. Metals today, gold and silver, both falling. Gold down $1 exactly, $2,019.90 for an ounce of gold. Silver falling just 9 cents, $22.78 for an ounce of silver. So metals, even with the dollar down small, metals sinking a little bit more today. Seem to be in a kind of a negative trend, which is surprising to me. I would be thinking that these gold and silver are good stores of value. Every intelligent portfolio should have a portion of that in gold and silver, depending on your risk tolerance and what you think of the dollar. And anyway, gold and silver kind of just floating, really not much happening in that market today. Oil up today, 73 cents, now over $78, $78.09 for a barrel of West Texas Intermediate, well above our upper range of around 75 we saw. We'll see if this trend continues and how long. I really believe that oil wants to be between 70 and 75. That's a price that seems to be good for producers and for consumers. Gas price has been coming down. We'll see now how quickly they start doubling back up, because it seems like these, once you see the price of oil start to go up, gasoline follows pretty quickly. Sadly, it doesn't work the other way around. When oil prices go down, gas prices don't drop as fast. Bitcoin today, big rally, up $2,154, back up well above 41,000, knocking on the door to 42, 41,975. A nice rally for Bitcoin. They've been selling off since these ETFs were brought online. Big rally today shows there's still plenty of optimism, or at least investors willing to put money up to keep the price of Bitcoin going up. Interesting things. We'll talk about more of that as these ETFs get a little bit more established. We'll see what kind of rules they start coming up with. I'm sure there's going to be some stuff, and we'll see how it affects the actual Bitcoin story, right? All right, so let's talk about PCE today, the inflation numbers. This is what we were waiting for. Numbers coming in. Listen to this, guys. They're showing top line PCE 2.6 for the year 2023. It's down from 5.4% top line PCE in 2022. That's a pretty big fall, man. Now, I don't know. I guess you've got to take these numbers with the degree of confidence you have in the government's reporting. But these are the numbers that the Fed claims they use. So there you have it. 2.6 for the year 2023. Core was up 2.9% for the year versus 3.2% in 2022. So core didn't budge much. The top line, of course, that includes food and energy. So according to their charting, and I'm guessing most of that is gasoline prices coming down. The monthly rise on the top line was 0.2%. Now for December versus negative 0.1% in November. So prices actually falling in November. The biggest holdout reason that's not even further down, housing, purchase prices, and rentals still elevated, but expected to moderate this year. At least that's what the research I've shown says. We'll see, though. I think that there's still not much as far as properties for sale that'll help keep prices higher. I know these rates are still scaring everybody off. They're talking about rates coming down. 6 3/4 isn't going to excite anybody, even if it's a lot less than 7.5, right? So interesting stuff. Listen to this. A lot of income stuff. Big news on incomes. Tons of income measures rising for the year. Incomes up 4.7% for the year. Compensation up 6.5%. Salaries up 6.8%. And disposable income up 6.9%. So what they're saying here is, even after inflation, disposable income up almost 4.5%. That explains the recent rise in consumer confidence. When disposable income goes up, when people feel like they have more money in their pocket, more money to spend on electives, for lack of a better word, well, that kind of gets people's confidence back up, not only in the economy, but in their own personal financial outlook. So I think that as supply chains continue to normalize, get back to some semblance of functioning well, and it's going to help keep prices from jumping again. I think oil's the wild card here, obviously. There's two big X factors in my mind. You got the oil prices, because those are already on the way back up, and you have corporate greed. Corporations, the data shows corporations basically sucking up half of the inflation numbers last year into their bottom line profit numbers. So we'll see where all of this goes, but according to at least the media and the government wanting us to believe that everything is heading back to normal. And I got to say, even though prices are still elevated on the stuff I'm buying, they're not really continuing to scream higher and higher. It's just now they're kind of higher and just staying there, which is still irritating as hell to me, sorry. But not climbing as fast as they were. So we'll see how all this continues to go. We're going to monitor this. We got some big stuff coming up, right? Next week, we'll have the Federal Reserve's meeting. So they'll announce their decision on rates. I'm guessing they're going to keep rates right where they are next week. We're also on February 9th, so early, not next week, but the week after, a week from next Friday, so 2 weeks from today, we'll get CPI numbers. That's going to be interesting because that one, I guess there's a little bit of fear now that there could be a shock coming with everything going so perfectly. Any upset on CPI would be a shock. So we'll see. We'll be watching that, of course, because if CPI numbers look anywhere near as good as these PCE numbers do, I think that kind of sets the stage now for the Fed to start cutting rates. They've kind of moved their bets back on the bond market and Wall Street, anticipating the first cut now coming in May rather than March. So we'll see again where it all plays out. Of course, we're going to bring you guys the news as it comes to us. Try to get you guys in a position where if you need to do any repositioning in your portfolios, change some stuff around the way you have your money invested, you'll have a little bit of a heads up on where things are going and what you should be doing. Also, interesting article today on Jerome Powell I was reading. They're saying that Powell is going to have to play politics to keep his job. Apparently, Trump has already kind of announced that he's not going to reappoint Powell if he's elected president. Biden says he will reappoint him. So let me ask you this. Who do you think Powell's rooting for, guys? I don't know what the strategy was there for Trump to say that. So I'm going to guess now Powell is going to look a little more favorably on getting things done in 2024 rather than being a completely neutral Fed chair. It's going to be interesting. It really is. The article was saying he's going to have to play his cards Biden's way to keep his job. I don't know how Powell's built. I don't know the man, but I would hope that the good of the country would come before the good of his own job. He's already a pretty wealthy guy, I'm guessing, and 2 terms as Fed chair is not a sad legacy to have behind you. A couple quick things before we wrap it up today. I saw an article today that said the United States is now paying $2 billion per day in interest on our national debt. $2 billion per day. Imagine the good things we could do with $2 billion a day to spend on infrastructure or, helping our schools or, there's a million ways we could use that money. And the sad news is they're probably borrowing $2 billion to pay $2 billion. So the spiral is on, guys, and it's not going to end well. And lastly, I was reading this article. I'm a real estate guy. I do mortgages and finance. But I was reading our friends, the real estate agents, our partners, are all getting set for a pretty big haircut this year. We saw they all lost that lawsuit. We called it coercion, what has been a tradition in real estate for many, 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 many years. And now sellers not paying the buyer's representation, cutting their costs to sell their home. At least we'll see how it plays out. And this is going to lead to buyers having to pay their own real estate agents. They can't afford that, so realtors on the buy side certainly going to be taking a haircut. Anyway, guys, that's it for the week. That's it for the day. We appreciate your support. We will be back here on Monday to get everything fired up for next week. All kind of good stuff coming next week. An interesting week this week. If you look at it really, not after all the ups and downs and the zigging and zagging, not much really changed. The stock market's pretty much where it was a week ago. Bond market, same. Dollar, oil, I guess, was the big changer this week, up pretty dramatically. Gold and silver kind of where they ended last week as well. So we'll watch it next week. We'll be bringing you the news. Everybody have a great weekend. NFC, AFC championships on Sunday, setting up the Super Bowl here in Las Vegas. Have a great weekend, everybody. Relax. Get away from all this Wall Street nonsense. Spend some time with people you care about, your families, your friends. Be ready to rock and roll on Monday. Until then, guys.